Pull up, back with another video. In today's video, we're going to talk about how we were able to catch the buys and the sells today in the market. And before we get into that, I want to let you know that I did call these plays in our community. I do have a free community as well that you can join. The link will be in the description. But let's get straight to the video. So the first thing I did was ask myself, Isaac, are we bullish or bearish? If you've been here for a while, this should be a very quick answer. We're not going to look in. No, you're not looking very hard. Look, we're bullish. Break the structure, we're bullish. Nothing else, nothing more. That's all we need to know. Now, now that we have identified we're bullish, we want to ask ourselves one question. And that question is the previous day. So if we're about to trade Monday, this was Friday, markets closed Saturday, Sunday. So we're going to trade next on Monday. The previous day ended with a bearish or bullish candle. So the previous day did end in a bearish candle, but we are in a bullish market. So what does that mean? Whenever you end with a opposite color or direction candle of the market direction, you're going to find your daily key levels on your 4 hour time frame. But for instance, if this was a green candle, I would then look for those daily key levels on the daily time frame up here. So now, because I know that I'm gonna find it on the 4 hour time frame, first thing I want to do is mark out this low to kind of remind myself where I want to find it under on the 4 hour. And let's go look for it. So on the 4 hour, I'm seeing we have a unmitigated wick below this that has not been touched. So this wick right here has not been touched, and I'll just cover this zone down to this low right here. Now, with that being said, this would be my pro key level. And let me draw the key level for you. Boom. We call this pro key level. We're gonna remove this line now. So we have our pro key level. What is a pro key level? A pro key level is just a key level going in the direction that we expect the market to move in. So because we're bullish, we want the market to buy. This is where we think it could buy from. Therefore, it would be a key level pro trend going with us, right? So after you find your pro key level, the next thing you're gonna look for is your obstacles. Now, for me, looking at this, the first obstacle I can obviously see is this one right here. Okay, obstacle. Then I'm able to see another one. I believe 50% of this has not been mitigated. And last obstacle I see that could possibly get in our way is this order block here. Cool. So what is an obstacle? Obstacle, all that is a key level in the opposite direction. So because we're bullish on the market, we wanted to buy up. That means your obstacles are going to be areas where if you were to sell, where you would sell from. And essentially the way we like obstacles to work is, we hit our pro key level, bounce off an obstacle, give you a chance for another entry on a buy, bounce off an obstacle, give you a chance for another entry on a buy, obstacle. Same thing, but eventually these buys right here would win, take out this high. That's the idea behind the obstacles. Now, just because this is the idea does not mean this will happen every time. With obstacles, you should only take confirmation entries when entering the market. Now, another way you can use the obstacles, let's say you never get to this pro key level. Let's say it never touches, you never get a chance. You are able to take counter trends on these obstacles to make a little bit of profit, but it's a quick scalp. It's not something you're going to hold very long. Again, you're still going to aim for 1 to 4s like I do on every other trade I take. But with an obstacle, just know that the win percentage will be a lower win percentage, being that you are trading against the market. But as long as you're okay with that, feel more than free to take them. So going 1 or 4 hour, we found our areas. Now the next thing we're gonna do is wait till our trading time. We're in the middle of both of these areas, and until we hit an area, we have no trade to take. So I like to trade between 8:30 Central Standard Time to about 11 o'clock Central Standard Time. That's just been the best hours for what I like to trade. That's right when New York opens and I trade New York session. So let's go ahead and mark this out on the chart over here. And this is, again, in Eastern. So it will say 9 to about 12. Cool. So this is the time we want to execute a trade. Until then, we kind of just let the market do what it does. As you can see, we obviously opened up right here. Now, the question you might be asking is, wait, hold on. We opened up in our key level. It's not our trading time, but this is the level we have marked out. What do we do now? What do we do now? There's nothing that you do simply because this is not your trading time. If the market wants to buy up and you just miss it, Who cares, right? With trading, you're not trying to catch every move. You're not trying to be the best winner. What you're trying to do is capitalize on things that you studied and you known to work. So if you know around this time, if this shows up and it presents itself, it'll typically work. Just wait till that time happens. If it only happens 6 times that month, if you capitalize on all 6 times, you can change a lot of things for yourself. So again, we're just gonna wait for our trading time to come. Skip a little bit over here. And before we finish this, I just realized this is for Tuesday. So let me move this to the Monday's trading time. So we have that 9 right there, Eastern to about 12 Eastern. So as we get closer to that time, we're gonna now go to our smaller time frames to start to make the range. Let's see what makes sense. So the first thing I'm noticing, of course, is that we reacted from our pro key level already, and now I'm trying to capitalize because again, I still wanted to buy up. We just did not buy at the very bottom. So now I'm on my 15 minute, and the first thing I'm noticing is that Asia created a strong low. So this low right here was created during Asia, and whenever we have a strong low or strong high during Asia session, sometimes the first move the market makes will be in favor of the strong low or the strong high. So with that being said, I had this low right here. Now, drawing out my market structure, we ran out this liquidity. And right after running that liquidity, we broke this structure here. So ran out liquidity, broke structure. Now, I always look for the T1. What is the T1? The T1 is the very first pullback after you break structure. So you see how we broke structure here? The market came up, came back down, pulled back, and then continued up. And if you're struggling with that, you also can go to line charts, and sometimes it'll show a little bit better of the pullback, and that helps you. But sticking to this, we have our T1. So now that we have our T1, I'm going to mark that out. Simple T1. So now that we got our T1, I'm immediately gonna go to a higher time frame to see where we could possibly react from. And whatever is the closest area, that's where I will put my entry. So first I stop by my 30-minute time frame and I am seeing this order block right here. So we could possibly look to enter here. Now we got to check a higher time frame than that. Let's see the 1 hour we have anything. And yes, on the 1 hour we have something slightly bit higher. We have this unmitigated wick, imbalance field, whatever you want to call it. You'll find out it's all the same thing. We have an area right there as well. Now let's check the 4 hour just to double check. And actually, I don't even want to go to 4 hour. I don't want it to show us what happens. So boom, you have two ways of taking this. You can either take this area right here. And remember, if you take this area, we're still going to aim at a 1 to 4. So honestly, this high right here is about a 1 to 4 probably. What does that say? It's about a 1 to 5, but I would aim for that high. If you want, you can just stop at the 1 to 4. It's totally up to you. But for this scenario, we'll just aim right here. So at this point, everything should be good. This is our trading. So now we just wait for the market to come to us. We don't force anything. So as you can see, the market gave you an entry here, but again, this is still not my trading time. I will not be on the chart. So I can't take this trade. But what I'm going to notice is that this happened before my trading time. Therefore, I'm gonna go to a smaller time frame to find the same T1 kind of setup to take that trade. So here I come to my 3 minute time frame, and the first thing I'm noticing is we ran out this liquidity right here. So this will be our liquidity run out, and then we also began to break structure on this in here. Now that we have the liquidity run out and the break structure, again, I'm finding the first pullback after we break structure, and that's going to be my T1. So now that we identify our T1, you can go to a higher time frame to try to find the exact area it can react from. But this should give you a 1 to 4 to where it shouldn't really matter too much. Yeah, this gives you a 1 to 8 if you take the whole trade. So we're just gonna wait till our trading time, and if it happens, it happens. Now, boom, now that we're closer to our trading time, the way I approach this T1 is I'm not even going to go to my higher time frame to find where we could possibly react from. This is such a small stop loss that I would just put it right below the T1 to tag us in. So whenever the market comes to this area during our time, I'm going to take this trade. I believe this gives me a 1 to 7.21 if I take the entire trade. But again, 1 to 4, I'm going to definitely take some partials. So now we wait as our trading time approaches. So we are now in our trading time and we have hit our level. So we now will press buy. I'm going to mark out the 1 to 4 area so I know where I would take some partials. But overall understanding that this is where we could possibly end up for the 1 to 7.
So the market plays out.
1 to 4 is already met. If you want to make your money, take your money there. More than fine. 1 to 4 is amazing. Now, there's going to be a trader who wants to hold. And again, like I said, you're more than welcome to do it. It will work out sometimes. But the way I looked at this and the way I approached this was, hey, let me just grab my 1 to 4. It was Monday. Starting your week on a win is always cool. And I noticed we are now in this obstacle, though. Now, remember what I said. The obstacles are areas that you can expect some type of pullback, kind of how we're seeing now. And you can capitalize on 1 to 4s on these pullbacks as well. So now that we're in this obstacle, I'm actually going to scale down to smaller time frames to make sure I'm able to catch this obstacle. And the first thing I'm seeing is on the 3-minute, we broke structure down here. Now that we have this break structure, what I'm doing is going to the higher time frame to find the area where we can react from. Because with obstacles, this is the thing. Sometimes you'll get a T1, sometimes you won't get a T1. But with an obstacle, there's a lot of times where it'll just start to head down and shoot very fast. So because I know that, I'm going to take this breaking structure as valid, be okay with understanding that this is a B setup and has a higher chance of losing. But the way I manage that is by lowering risk to not be as much, but still be able to capitalize on the opportunity the market presents itself. So boom, as I'm on my higher time frame, my entry would actually be at the wick it's currently at. I would enter right here with my stop loss up there. And again, we're just looking for the 1 to 4. If it goes further, we don't care because especially with an obstacle, you want to be safe and get out when you need to get out. So now we would enter the trade right here. And again, same thing we did on the buys, just let the trade play out the way it wants to play out. Boom. And as you can see, this is how we won our second trade as well. And again, I want you to pay attention to when we got our entries. We got our buys during our time, and we got our sales during our time. There's a reason why we trade certain times. This allows us not to take trades that we don't need to take, right? This same setup of forms and appears in the middle of the night. One, I don't want to be on the charts all day, so I need to limit when I'm at work, right? We're all in this to leave work, I would think. So narrow yourself down to a certain time. You want to use my time again. It is 8:30 Central to 11 Central. That is New York open till about that lunchtime. But yeah, if this video helped you out, I would appreciate a thumbs up. Give me a like, comment, subscribe. Tell me your favorite part. Tell me parts that you don't quite understand. Maybe we can make some more videos about that. Don't forget that free trading Discord link is going to be in the subscription. So go ahead and join that if you want to join a community full of like-minded traders who are all trying to win the same way you're trying to win. But that is everything I got here for today. Y'all be cool. Y'all be kind. Y'all be safe. And I'm going to catch y'all on the next one.